Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for Friday, May 19th. Today, as usual, we're going to take a look at where we closed the week with the markets. And then from there, some of the headline news that drove price action this week. Last up, viewer question of the week. And it's all about how to tell if your stock has, in fact, reversed its downtrend. We're seeing a lot of downtrend reversals as the markets shape up, certainly among many beaten down technology stocks. So let's take a look at some of that data from last week that had an impact on the markets. And first up, we did see retail sales rebound in April. And this certainly was good news because the prior week we did see consumer confidence drop pretty dramatically. We also saw April industrial production rise after 2 weeks of being flat. And then home builder confidence rose for the fifth consecutive month, with housing starts increasing, all due to a lack of inventory for homes. So net, we are seeing vibrancy within the economy. And from there, we did see U.S. jobless claims fall. And then Fed Chair Powell, speaking today, hinted at a potential pause to rate hikes. So generally, some pretty positive news out there for the broader markets. Next week, we get some very impactful inflation data with flash services and the flash manufacturing PMI data earlier in the week. Later in the week, we will see April core consumption expenditures, that PCE data for April, very closely watched by the Federal Reserve. And then the Fed's latest meeting notes will be released on Wednesday. And then later in the week, we will see the first quarter GDP number, the first revision to that, and that's going to be a gauge to whether the economy is expanding or weakening. So lots of data next week as well. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. A couple of items to point out here is the fact that we are just now getting up to that key area of resistance for the S&P 500 at 4,200. We did close the week at 4,191, so just below that. If we can break above that resistance and remain above it for a bit, that would be very constructive for the broader markets. Also, we do have positive momentum with that RSI above 50, trending higher, and then likewise with the stochastic. So good week for the markets as we broke out of this lengthy period of kind of a go-nowhere environment of consolidation. From here, let's take a look at the underlying sectors because we are seeing a firming up of rotation shaping up. This up here at the forefront is technology, followed by consumer services and consumer discretionary. And these areas are very much high growth and very different from what we have been seeing over the last 6 to 8 weeks, where healthcare, consumer staples, and utilities were sitting up there at the forefront. The uncertainty among investors really pushing moves into those more defensive areas. So nice rotation into growth, which would be needed to sustain a nice continuation rally as these areas really make up a bigger part of the broader markets. So from here, let's go ahead and take a look at the financial sector. While it was not the top performing, it did have a good week last week. We can see that the momentum is waffling a bit, but there was generally good news out about the banking community, with a large West Coast bank stating that their deposits had increased. So that was good news. The financial sector was up 2.2% relative to the S&P 500. So from here, I will take us down a little bit further. We'll drill into some of these ETFs that are really impactful as far as reporting where the markets are seeing money flows. A 2-month daily price chart view. Again, that relative strength indicator. So you're seeing these ETFs sorted strength to weakness. And first up, let's take a look. Software stocks continuing to firm up 5.3% relative to the NASDAQ, up 3%. We can see that big gap up move into a base breakout. nice positive momentum indicators here. And this is one area that we are going to review because not all technology stocks are similar to this. There are any number of names that are really down from their year-plus highs in price and are beginning to reverse. Next up, we can take a look at another technology sector really did well last week, and that's semiconductors, up 7.8%, very clearly reversing their downtrend. And we can see the momentum shift here with that MACD into positive territory. Nice volume on the rally and very constructive. These two areas are highly cyclical and very impacted as it relates to recession fears. And as we did see the economic data pick up a bit, these was constructive for these two areas as the economy is continuing to remain vibrant. We also did see a move upward of interest rates. This is the yield on that 10-year, and it is now up here at that 3.7% rate. So also of note is the fact that the tech names that normally fare poorly in a rising rate environment were able to outperform quite a bit last week. You also want to be aware of the regional bank move. We did see a rally in KRE last week of 7.6%. So firming up, not ready for prime time yet. We don't have positive momentum here. And then also we do have this really ominous downward trending 50-day simple moving average. Could easily act as upside resistance. So let's take a look at stocks that are beginning to reverse their downtrend so you'll know what to be on the lookout for. And this is going to be within software stocks in technology. First up is Workday, WDAY. We can see this sharp downtrend that developed while the broader markets were trending sideways. But this week, we did see a significant rally so that the stock broke above each of these moving averages. We can see that momentum shift black line up through the red and the MACD now in positive territory. Likewise with that RSI above 50 and trending upward. So this would be a candidate for a continuation rally in this stock as it reverses its downtrend. Another name to look at as an example is SPLK, SPLK, another software stock. Similar characteristics, move above these moving averages, which often can be upside resistance. Once we break above that, nice high volume, and then that MACD now in positive territory. Likewise with that RSI above 50 and trending higher. Look for further upside in this stock should we see a nice continuation rally in software names. Now from here I will share with you an example of a stock that is not ready for prime time in the software space. This is Atlassian, EAM, and a couple of characteristics to be aware of. The stock did experience a nice rally last week. However, it remains below this key 50-day and 200-day simple moving average. That MACD just at that net neutral, not in positive territory. And then also we did see that MACD crossover, but it is not in positive territory either. So this would not be a candidate for a stock that has potential more in the way of near-term upside. That's it for this week. Everyone have a fantastic weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.